BTS Group AB bets on AI to drive 2026 rebound. BTS Group AB Class B, BTS.B, has held its Q4 earnings call. Read on for the main highlights of the call. And never miss an update about BGPBF stock. Times unlock hedge fund level data and powerful investing tools for smarter, sharper decisions. Times stay ahead of the market with the latest news and analysis and maximize your portfolio's potential. BTS Group AB's latest earnings call painted a cautiously balanced picture. Management acknowledged a weak 2025 marked by flat sales and a sharp 25% EBITDA drop, driven mainly by North America and some Asian markets. Yet they also highlighted strong AI momentum, rising bookings, and significant cost savings that underpin a planned earnings rebound in 2026. AI innovation becomes core growth engine. BTS leaned heavily into its AI narrative, positioning these tools as a company's next profit driver. The Wonderway platform is now deployed in 115 projects with around 28,000 users, and new AI offerings such as a Super Companion Coach, Digital Mirror, and Teams or Slack Salesforce integrations help generate $19.6 million in 2025 AI bookings. North America turnaround shows early signs. North America was a focus of the recovery story, with management guiding to moderate organic growth in Q1 2026. Bookings in Q4 rose about 25 to 26% year-over-year after stripping out a large one-off renewal loss, giving BTS more confidence that demand and the pipeline are finally turning upward in this key region. Europe and other markets provide stability while group results stalled. BTS Europe and BTS other markets delivered both revenue and profit growth in 2025 despite a tough backdrop. Management expects these divisions to keep growing at a double-digit clip in 2026, suggesting that non-U.S. regions will remain a reliable earnings pillar as North America recovers. AI-driven productivity cuts bolster margins. The company used 2025 to reset its cost base, combining severance with AI-enabled productivity gains. After 18 million Swedish krona in restructuring, BTS now expects roughly $5.0 million in savings from a May breakthrough, another $2.6 million from Phase 2, plus about $1 million more in 2026, providing a sizable tailwind to EBITDA. New clients expand the AI opportunity set. Management highlighted wins with AI native and West Coast clients to show that BTS is gaining credibility in tech. A notable example is Anthropic, which chose BTS as a go-to-market enablement partner, reinforcing the firm's role as an integrator for large enterprises seeking to consolidate vendors around scalable AI solutions. Weak 2025 underscores execution risk underneath the strategic progress. 2025 numbers were sobering, with flat revenue and a 25% EBITDA slide year-over-year. The deterioration makes 2026 promise rebound more of a must-deliver scenario and raises the bar for management to convert AI hype and cost cuts into durable profit growth. North America drag group results in 2025. North America was singled out as the main source of weakness, accounting for roughly half of the group's downturn. Revenue and profit was soft throughout the year, and Q4 remained lackluster before turnaround measures, underscoring how critical sustained U.S. recovery is for the group's valuation and earnings power. Non-core factors skewed Q4 profit picture. Nearly half of the Q4 profit decline stemmed from non-core effects like currency headwinds and severance tied to AI rationalization. Management argued that underlying operational performance was stronger than headline figures imply, suggesting some of the Q4 hit should not recur in 2026. License revenue under structural pressure. License revenue slipped from about 10% of sales historically to roughly 7%, with Q4 hurt by a major non-renewal in North America. BTS expects newer tech-based licenses to be more recurring but does not see a broad license recovery until around mid-2026, leaving a revenue gap that must be filled by services and AI products. Asia weighs on other markets' profitability. Although BTS other markets grew revenue, profitability was hampered by issues in Thailand, Korea, and China. These regional challenges show that the growth outside Europe and North America is not yet translating cleanly into profit and may require further restructuring or strategic adjustments. Capital allocation still an open question. Despite noting that BTS trades at roughly 7 times 2025 EBITDA, the board has not committed to buybacks or other capital returns. This leaves investors guessing whether management will use a low valuation as an opportunity or prioritize balance sheet flexibility and investment over near-term shareholder payouts. Guidance points to 2026 rebound, but with risk management guided to year-over-year growth for the group in North America in Q1 2026, with North America's EBITDA expected to rise at least 15%. For the full year, BTS targets higher EBITDA than 2025, double-digit growth in Europe and other markets, and incremental AI-driven cost savings, though license headwinds and the North American turnaround remain key swing factors. BTS's earnings call outlined a company in transition, moving from a disappointing 2025 toward a more AI-centric, leaner business model. Investors now must weigh credible signs of recovery in bookings, cost savings, and regional growth against a weak starting point and execution risks, making 2026 a pivotal test of the turnaround story.